A very good morning, ladies and gentlemen. It's 11:01, so we will start our webinar now. Thank you so much for joining us for our session on landscape of VAT compliance in the UAE and Tax Audit Framework, which we jointly organized with the German Emirati Joint Council for Industry and Commerce. So first of all, I would like to give a big thanks to Oliver and the team for organizing this event with us, and we look forward to a very interesting session. Just a bit of housekeeping during the session. If you have any question and answer, please feel free to drop them at the Q&A box at the bottom of the screen. And at the end of the session, we will have a question and answer session, or we will come back to you after the session if time doesn't permit to answer these queries at all. Yes, so let's have a look at the agenda for today. Oliver will start to give a welcome note. Then I will give a very brief introduction about MBG Corporate Services for all of you who don't know us yet. Then I will hand it over to Mr. Mahmoud Batri, who is CEO of GCC Institutional Business and Taxation, who will give us an overview about implementing VAT in UAE and VAT basics. And then Mr. Deepak Varian will take over and talk more about FTA Tax Audit, as well as learnings from implementation of UAE for all of you who have joined us from Qatar today. So with this, I don't want to prolong it longer and hand it over to Oliver to give us the welcome note. Thank you.
Yeah, thank you very much, Lydia. Also, thank you to the whole MBG team for putting together this webinar, which obviously attracts significant attention, even though here in the UAE, if I may say so, we have been talking about the topic. We have been all dealing and living with the VAT topic for several years now, but still, there apparently is room for further updates and exchange of experiences. And I can fully confirm, even we in AHK, we have been looking deeper this year into certain topics, not at least based on recent experiences gathered from various tax audits. And this is a very important pillar of our today's webinar. I also would like to welcome all those joining from Qatar. Our colleagues from our Qatar office, Rebecca and Elif, have been inviting as well. Why? Because we expect the introduction of VAT in due course, probably next year. Therefore, I understand also German businesses and international businesses in Qatar are starting to get accustomed to the system, which looks a little bit like a household system to all of us here in the UAE, even though it has been introduced, Lydia, you know better than me, or especially Mahmoud, it has been introduced only 5 years ago. So please prove me wrong. I'm assume I'm wrong in this case, and I'm luckily very much relying on the fantastic expertise that I have here within my AHK team, but even more that we have in the community of our joint business council. Having said this, I wish us all a lot of insights. Definitely I will have some. And thank you for moderating this today, Lydia. Back to you.
Thank you so much, Oliver. So just before we dig into the topic, I'll just give a very brief introduction about MBG Corporate Services. So the company is headquartered in Singapore, and now we have grown to 18 offices in 8 locations, including China, Japan, India, Germany. And here in the Middle East, we have offices in Oman, Qatar, as well as UAE, where we work with approximately 3,000 clients. We provide services at every stage of a company's life cycle, so right from market entry, feasibility study across every compliance requirements they have here in the Middle East, up to extension or even liquidation of entities. This we do with 8 in-house verticals, so traditional audit and assurance practice, where we are appointed external auditor for all mainland and free zone entities. Most of you who are here in the UAE, and Qatar has a similar program, have heard about the ICV program. So we are one of the approved ICV certifying companies for Moyad, who has now taken over the ICV committee. Risk advisory, internal audit, standard operating procedures. Of course, the main focus today sets on indirect tax. So the team is headed by Mr. Piyush Jordan and Mr. Mahmoud Batri. Here we support in terms of VAT, excise and customs. Next year, corporate tax is coming here in the UAE. So we have a different team working on direct tax matters as well. In terms of M&A, we support as well on both buy side as well side, any kind of valuation up to PMI. We have an in-house legal team as well. And then we also look into topics such as strategy and transformation, as well as technology advisory. But now I would like to introduce the first technical speaker from today, Mr. Mahmoud Badri, who is CEO, GCC Institutional Business and Taxation. Why we have invited him? Actually, he comes with huge experience of more than 3 decades of working in finance and accounting domain. Moreover, his experience is with Federal Tax Authority, and Mr. Badri became the first head of the tax return and payment department in UAE history, and I'm sure he can provide very, very valuable insights about how VAT has been implemented here in the UAE. So Mr. Badri, over to you, please.
Assalamu alaikum, everyone. Good morning and sabah al khair. First of all, I would like to take this opportunity to thank you all for attending this knowledgeable webinar, and a special thanks to Mr. Oliver and his team, Ms. Lydia, Mr. Rahul, and marketing team as well. Being an FTA, Federal Tax Authority in United Arab Emirates for 4.5 years is a big experience that I got how to create function from scratch. From my experience, I understand that VAT is as an obligation for the both parties, Federal Tax Authority and taxpayer. In this slide, you can see that most responsibility and framework for each parties. Let's say Federal Tax Authority is an entity implementing the law, not introducing the law or publishing or creating the law. It's only implementing. Therefore, their main obligation and responsibility is to create a function of how to file a return, function of how to file a VD, voluntary disclosure, how to receive the amount for those taxes, penalties management, extra, and especially for refund, as well as they are providing, or we can say is converting the law world to market world by issuing private and public certification, guidance, awareness, workshop, all these seminars, webinars to explain the law a simple way to the taxpayer. Also, they are managing the indirect refunds, such as UAE home builders. For sure, in Qatar also, they will implement Qatar home builders, diplomatic mission for foreign mission, foreign business who are coming to UAE or the region in the future to study for the business. And recently, FTA added mosque fund. Whoever is building a mosque, all the VAT payment can be claimed back to the who built the mosque. Let's go to the other side, the other party, taxpayer. As we know, taxpayer is a self-declaration. It means that FTA is trusting the taxpayer. As soon as the taxpayer registered in the FTA system and got the TRN number, FTA assumed that the taxpayer is aware of all the procedure and the steps. Therefore, the most important thing for the taxpayer is to understand your business. Nobody will understand better than you for your businesses, whether you are in zero-rated industry, whether you're in standard rate industry or out of scope or exempt. As I said, it's self-declaration. All your data for filing a return should be accurate, and all the documents related to those data should be available. Any correction or, let's say, mistakes happen during the filing return, you can adjust it later on. FTA will not come back to you, this is wrong, this is right. You have to correct yourself and maintain all the support and document with you whenever the FTA requests. In the next slide, you will see that what FTA did during this, now we will complete the 5 years, how many guides issued, how many public clarification issued, and how many registered in the portal, what new refund type introduced, such as Export 2020. I will talk only the last point was introduction for the new online platform. Usually, you need to start first to understand your weaknesses, challenges, and gray area to solve them. Therefore, UAE started with the interim system in the port for our platform. Then by have a feedback from the taxpayer, from the users, internal users, customers, suppliers, all the shareholders that involved on that platform, they got a feedback and comment, and they create a new system which we launched soon called Emirates. The next point, FTA also amended some VAT decrees, which my colleague will explain more on that. Next slide. Yeah. I think my part is already gone, and I would like to take the presentation to my, I will not say my colleague, my brother and sister to explain more. Thank you very much.
Thank you so much, Mr. Badri. Now I would like to introduce Deepak Varian. Actually, Deepak also has a background of working with Federal Tax Authority, so he has more than 14 years of experience in the field of VAT, excise and custom. And before joining us, he was working as a compliance auditor with the Federal Tax Authority. So I'm sure he can also provide us some valuable insights about the process of an FTA tax audit and common mistakes that companies are facing here in the UAE. So Deepak, over to you, please.
Good morning, everyone. Thank you so much for joining this webinar today, and I hope my voice is audible to everyone. Lydia, could you please confirm this?
Yes, we can hear you very well. Thanks.
Thank you. So, Mr. Badri, thank you so much for your introduction, and you have set the context well by explaining the VAT journey so far in the UAE and your experience in FTA. So for the benefit of our audience, we have tried to include an overview of GCC VAT framework. Having a look at the implementation of VAT in this region, the GCC countries are some of the latest countries, I would say, to introduce a VAT system which has its origin in Europe. So the idea was between all the GCC states to sign a treaty, and for all the 6 GCC countries agreed to implement VAT in their respective countries as per the Unified VAT Framework Agreement. But that's not what actually happened as agreed, as UAE and only KSA are the first one implemented VAT with effective date of 1st January 2018. And Bahrain followed them with effect from 1st January 2019. And Oman introduced VAT with effect from 16th of April 2021. The countries that left out now is Kuwait and Qatar, and they are still a little bit of questions around the implementation. As per our understanding, Qatar has the system ready, and the draft law is also ready. Just a matter of announcing the go-live date in terms of Qatar. But in terms of Kuwait, it would be a little more difficult since it has some kind of parliamentary and political processes, as other countries, other GCC countries do not have such parliamentary systems like Kuwait. So this slide gives us the drivers behind VAT in the GCC. So everything started, you know, in 2008 and 2009, where the whole tax world actually changed due to the global recession. Many countries got together and started looking at international tax rules. Lots of countries rely on tax as a main source of revenue, And it's very important at that point of time when countries face budget deficit, they need more money for the infrastructures, public expenses, etc. So they realized that the international tax rules were a little bit of out of date, and many companies were using this tax rules to actually pay less tax. The purpose of these treaty agreements is to eliminate double taxation. Many global companies were moving money from high tax jurisdictions to low tax jurisdiction. So therefore paying like a very minimal tax. So the G20 countries got together and they approached OECD at that point of time. OECD is organizations that they started off with a project called BEPS. It's Base Erosion Profit Shifting. Under this project, they were basically focusing on areas where which countries needs to address in order to minimize and eradicate these kind of base erosion profit shiftings. So they came up with 15 action points. There has been many other tax developments in these regions as well, especially in GCC region. For example, if you look at the compliance regulations, they introduced FATCA. It is called a US legislations requiring banks to disclose details of US citizens or US taxpayers to tax authorities in US. So there's another compliance requirement, ESR, ICV. All these compliance requirements has been implemented in this region over the last three years. Overall, there has been a lot more focus on tax, and tax is now increasingly becoming a boardroom issue. So every company is already discussing about what is the next steps to be implemented. So next country is going to be implemented, VAT is Qatar, and then following Qatar, Kuwait will be the implementation partner. VAT was first discussed. If you look at this region, GCC, VAT was first discussed in 2004 and 2005 range, but over the time, International Monetary Fund recommended to GCC countries that they should diversify their revenue away from hydrocarbons, and they could potentially generate approximately 1% to 2% of the GDP through VAT if it is introduced on a timely basis. Though corporate tax was also there in some of the GCC countries, generally the taxation element was very limited in most of these countries. There was no personal income tax. There are a lot of free zone, economic zones, and free zones in each jurisdictions. That's why VAT was introduced in this region, and then that's the best tax that can be accommodated to overcome this deficit. When oil and gas prices also goes down, they realized the importance of having a diversified revenue in place of funding public expenses. And when you look at the VAT structure, so it's a very popular tax and it's very efficient. The onus to collect tax on the taxpayer. The tax authority is just to collect on a periodic basis, unlike corporate tax. So every monthly or quarterly cycles, they would be collecting these taxes from the registered taxpayers. And each stage of the supply chain, you are able to collect VAT. Unlike corporate tax, the value-added tax is intended to be a tax on which businesses collect rather than pay on their profits. So VAT will be levied on each supply chain at that time, on each value-added services, so goods and services. And VAT is not a new tax system. It has been implemented over 160 plus countries worldwide. In some countries, it is called GST, and some countries it's called VAT. Or sales tax, but it's all the same as it is levied on supply of goods and services broadly. In next few slides, I have majorly focused on simplifying the VAT audit process, where every business in the UAE should consider while preparing for any VAT audit in the future. The diagram that is appearing on the screen itself, it's like a report, activity report published by FTA in 2022. It clearly indicates that out of 9,000 field audits and inspections in the local market, they have issued 1,200 plus violations, and 130 million tax liabilities been identified. over 5 million worth illicit tobacco and tobacco products without bearing a digital tax stamps have been seized, and 1 million worth of excisable drinks have been confiscated. So around 400 plus notices have been issued for non-registered taxpayers. So which means even though we are in more than 4 years from the VAT implementation, there are taxpayers who are not registered in the systems, even though they are liable for registrations. So these indicates that FTA is very active in terms of issuing the audit notice, conducting the field audits on a regular basis. We are actually observing a steep in these numbers of audit notices released by the Federal Tax Authority during the last quarter, and it is going to be continued in the coming quarter as well. Due to the statute of limitation clause in the tax procedure law, the FTA would be conducting these more audits in the coming months, and I am going to explain the changes in the statute of limitations clause as per the UAE legislations further in details in the coming slides. So when you look at the legal framework or legal provisions, VAT filing is also based on a self-assessment system, whereby a taxpayer collects the VAT on behalf of government and pay to the authority by filing their VAT return format on a periodic basis. Since it is a self-assessment mechanism, there should be some kind of control in place to ensure the compliance level of each taxpayer. This is where the VAT audit comes into picture, and it becomes VAT audit is kind of a tool in the hands of FTA to assess the VAT compliance level of taxpayers. So if you look at the statute of limitations, in coming year, in 2023, 2018 business transactions are statutorily barred to request and review the business records because of the requirement to maintain business records and tax-related documents for 5 years, minimum of 5 years from the end of the tax period that belongs to. So, for example, a company is filing a monthly returns. In January 2018, taxable transactions records should be kept at least till 31st Jan 2023. So due to this limitations, you may see an increased number of audits, FTA audits in the coming months. However, there are some exceptions. There are exceptions to the general rule. The 5-year timeline for keeping these records is extended by additional 4 years if there is a request coming from FTA for those taxpayers to keep these records for additional 4 more years. And another exception is for real estate related records. Any business entity should be maintained these kind of records, real estate related records, for minimum of 15 years. So as I mentioned, this is general rule of statute of limitations rule. Law. There was a recent amendment to this statute of limitations by virtue of this. There is an amendment in the VAT law. Based on this amendment, FTA can conduct a tax audit or issue a tax assessment to the taxable person after the 5 years from the end of the relevant tax period in certain circumstances, which is detailed in the newly inserted article, which is Article 79 in the VAT decree law. So due to this amendment, FTA will not get an additional, due to this amendment, FTA will get an additional 4 more years to complete the tax audit. So what this amendment means, so before the expiry of the 5 years, FTA would be issuing an audit notice to the taxpayer just to keep the records for additional 4 more years to conduct the tax audit. So it is very important for taxpayers to have the proper system in place and records in place to complete the tax audit procedures. Moving to the next slide. So if you look at the provisions when it comes to audit selection criteria, there is no precise reason for a selection of audit cases by FTA. However, there are some indicative factors which trigger for an audit, which we are going to discuss in the coming slides. With respect to closure of an audit, there is no defined timeline. to the closure of VAT audit. It depends upon the complexity of each business, number of transactions, and the systems that they are using for filing purpose, reporting purpose, etc. For the businesses under the purview of VAT audit, and the authority decides to have a site visits first, it is required to send a notice prior to this visit, 5 days prior to this visit in the normal scenario. As per the VAT provisions, if they decide to go for a site visit or field visit, they should send a notification 5 days prior to the visit. However, as an exception, there would not be any kind of prior notice with regard to a field visit in case of authority foresee that there is any kind of tax evasion involved in such companies. But in general, there could be a closure of 72 hours of this business to complete the audit at the premises of taxpayers' premises, and it can be extended more with a written consent from Director General. So another scenario where it requires an approval from a public prosecutor is for the residence visit of the taxable persons. So this requires an additional approval requirement. Similar to the rights of the auditor, as mentioned in the VAT law, there are some rights of an audited person, which is taxpayers. So, for example, request the tax auditors to show their identification cards when they come for a field audit, and obtain copies of the audit notifications they sent to the taxpayers. Suppose in case sometimes we have practically seen that the audit notice that FTA is sending to the taxpayers is going to the spam folder, or the persons registered, that or authorized persons has been left the company and then it has not been updated. The registered email ID has not been updated in the system. Due to various reasons, this audit notification can be misplaced. So in that case, you can request for an audit notification sent to the respective taxpayer. And they can also attend the tax audit which takes place if they are conducting the audit outside the FTA premises. Also obtain copies of any original paper or digital documents seized by the auditor during the audit. Let's look into the audit process in general. A typical audit process involves these steps. Audit notice is the first thing, the first step in the formal audit. I'm talking from the formal audit as per the tax procedure law. And the first step is receiving an audit notifications. And it is there would be a predefined Excel sheet attached to the content of the email. And the email talks about you have been selected for so-and-so a audit for certain period. And please provide the preliminary information such as your financial statements, your trial balance, the transaction listings. So what is important is the transaction listings. That's why they are requesting the transaction listing for the audit period in the predefined Excel format. And they're going to provide you only 5 business days to provide all these preliminary documents in the first instance. So based on our experience, these are one of the biggest challenge that taxpayers are facing due to lack of robust IT system in place or lack of maintaining the business records. So 5 business days, imagine if you are getting an audit notice for the last 4 years. So the question is whether you are able to provide these information within 5 business days. After this request for sample sales and purchase invoices, there will be a random selection of sampling, and depending on industry to industry, FTA could choose the sample, and then they will be requesting supporting documents for the samples selected. FTA can also request the VAT treatment adopted for any specific transactions and related supporting documents, for example, contract or signed agreements between customers and suppliers. Overall, during the audit process, FTA may also schedule a site visit and request relevant tax-related documents directly from the system to ensure that the provided informations or documents are is readily available in the system. Upon review of all these information submitted, auditor prepares a report and submit to the audit review committee in the FTA for approval. So after the audit committee's review and approval, it would go to the director of the compliance and enforcement department for final approval. Based on all these actions, following actions like issuance of audit notice, first would be after the completion of audit, the first notice would be the audit completion notice, and then there will be a tax assessment notification, and there could be a penalty assessment notifications, and all these documents would be issued by the authority in Arabic text. For some cases, practically we have seen authority is requesting to fill a questionnaire which precisely gives a high-level understanding of your business. So, but they are not following this for all the companies. Some companies, they follow this questionnaire approach. Now, let's look into some of the probable factors for an audit selections. So this slide explains some indicative factors which trigger a VAT audit from the authority point of view, but this is not an exhaustive list. If we prepared these indicative factors based on our observation and past experience. So first point is related to VAT refund position, especially those taxpayers in a regular refund position and requesting refund periodically, as well as some taxpayers are in a regular refund positions but not requesting refund from tax authority. Both cases it may considered as a high risk taxpayer, because some cases which is been lying in the system as refund for but never requested the refund from the authority. So those cases would be considered as high risk companies or profile. Large scale business, this includes companies has significant turnover declared through the registration at the time of registration, and then past submitted returns, the trend that they have submitted mentioned in the sales values in the submitted returns. Similarly, companies reporting significant zero rated and exempt supplies or mixed supplies may also considered as high risk taxpayers. And it also applies to companies are into the group returns. So if it is a very large group involving many types of the business activities, it can be mixed with the insurance sectors, financial sector, real estate sector. So every business has its own implications and complexities. So depends upon the group structure, there could be considered as a high risk profile taxpayer in the system. Number of voluntary disclosures. Why do you think this is considered as a risk factor for an audit selections? Majorly because the large number of VD triggers and doubt. When I say VD, it's a voluntary disclosure. It's a mechanism to correct your mistakes through a new approach where you are correcting the original returns through a voluntary disclosure process. So the large number of VD triggers a doubt where it indicates that the taxpayer's submitted return is incorrect and it has been corrected many times. Of course, it can be justified with a clear explanation while submitting VD, but however, the frequency and the difference in tax position also matters and requires a detailed analysis from tax authority. So it also depends upon the change that is going to happen in the original tax position due to the VT submission. History of late return submission and occurrence of incorrect filing. This is based on the number of times you incurred a late return submission, fixed penalty, or late payment penalty into your e-service portal. This indicates that you are non-compliant in terms of timely submission. So that's the reason it's easy for them to filter out the number of taxpayers getting these kind of fixed penalty on a regular basis. That's the way how they sorted out these companies for audit selections or any kind of questions. Non-reconciliation of customs records is related to if during the audit, if upon a request from the taxpayer or upon request from the authority side, if the taxpayer fails to submit any reconciliation between the customs records and internal books, and you also have made significant adjustments to imports, may trigger for questions from authority. So if you look at the UAE VAT return format, there are two boxes which is related to import. Import through customs, and then there is an adjustments for import. So it also depends upon what kind of adjustments you are making into your return and then whether you are maintaining these reconciliations between the customs record versus the books. This point is basically when it triggers during the process of audit. As I mentioned, negative and positive adjustment, it's all related to the import of goods. VAT return reporting structure is something but related to the way you are reporting the sales, whether you are only reporting standard rated sales, or you are making standard rated, zero rated and exempt sales, or you only report zero rated supplies. So the more you report, when it comes to reporting structure, the companies are always reporting zero rated supplies would have high risk profile in the system, because they could be always in a refund position. So they would like to understand, the authority should understand whether the VAT positions that company has taken with respect to zero rating is correct or not. Whistleblowing program is the recent program initiated by FTA to enhance or to make sure that companies are compliant in terms of VAT regulations, and general public can report if they identify any non-compliant behavior followed in any company. So it is just a promotion programs where people can voluntarily report the mistakes done by taxpayers. Rahul, can you move to the... Okay. So I hope this could be another interesting topic that the most of you would be looking forward. Again, it's not an exhaustive list. This is some of the common errors that we are still seeing in the submitted VAT returns during our review. So we do conduct a lot of compliance review and VAT health check services. So we still see these kind of errors done by taxpayers on a regular basis. First thing is the incorrect application of adjustment column. There is an adjustment column in the VAT return format. The taxpayers should use these columns for any adjustment to output tax as a result of bad debts, sales of commercial property in the UAE. So there could be two instances related to output tax adjustments will report in the adjustment column. These are bad debt relief adjustment as well as commercial property sales in the UAE. And with respect to input tax, which is related to your purchases, and that adjustment column would be used to make only bad debt adjustment and year-end input tax apportionment adjustment and capital asset scheme. But in reality, many businesses are mistakenly reported tax credit notes entries or any kind of adjustments that they make in the returns. They report these figures in the adjustment column. So if you look at an audit perspective, there are certain companies must report some amounts in the adjustment column. But if FTA do not see that kind of adjustments in those industry or those companies, it should definitely create some confusions why these companies are not making any adjustments in these adjustment columns. So in both ways, either you report incorrectly or you never report anything in the adjustment columns which you're supposed to do. So these could be one kind of mistakes that we are seeing in the company's returns. Incorrect representation of exempt, zero rated and out of scope supplies. This is another common error in VAT reporting. Firstly, you need to understand the difference between these type of supplies and the eligibility of input tax recoverability for each supplies. So there is no VAT impact on these supplies. Whatever supplies I mentioned, exempt, zero rated and out of scope supplies, there is no VAT impact because they are not levying any VAT on such supplies. However, there are some reporting requirements for zero rated as well as exempt supplies, which means you do not report any out of scope supplies into your VAT returns, but unlike zero rated and exempt supplies. If you report zero rated supplies mistakenly under exempt supplies continuously and availing input tax credit in each tax period, there would be a high chance that you would be subject to an FTA audit or correspondence review or limited review, whatever it is. So it is just FTA is seeking clarification on the same. Why are you reporting zero rated supplies, exempt supplies in exempt supplies, and you are claiming input tax? So fundamentally, if you are making an exempt supplies, you are not eligible for claiming input tax. So, but in your returns, you have been mistakenly reported zero-rated supplies and exempt supplies. That was the issue. So when it comes to out-of-scope sales, even though there is no reporting requirement from VAT reporting perspective, VAT FTA is requesting a detailed information on such sales at the time of formal audit or any kind of refund review. Why this is because some businesses are lacking to provide supporting evidences to prove that these are actually out-of-scope sales. So that's the reason FTA is specifically asking out-of-scope sales transactions in the predefined Excel format that I mentioned in the beginning. So the next point is something related to lack of monitoring of tax payment summary in the e-service portal. So I'm sure nobody likes to receive any kind of surprises and the surprise is something related to the administrative penalty in your portal, right? So why this is coming? Because it is because of lack of frequent monitoring of your e-service portal sometimes leads to missing an opportunity to submit a reconsideration request when there is any administrative penalty levied by FTA. So this happens when there is a person in charge in your company filing the VAT return and payment on time, but they never look into the portal until the next quarter or next due date of the returns. So if there is any administrative penalty coming to your portal, even by mistake, it can happen even by mistake. So you lose that opportunity to submit a reconsideration form within the stipulated timeline to the FTA, because that's the first step to in the tax dispute resolution mechanism as per the UAE structure. So first step is the submission of reconsideration form. So you will lose that opportunity to submit a reconsideration request to appeal against the penalty that you received. The other common mistake is availment of ineligible input tax credit. It is very common, and that we have seen during our review is where the taxpayers have claimed input tax related to entertainment expenses, repairs and fuel expenses related to motor cars, where the motor car is provided to employees and employees using these motor cars for personal as well as business purpose, and mobile phone expenses used for both business and personal expenses. Interestingly, there is a new public clarifications which details the eligibility for claiming input tax related to the mobile phone expenses, and it has clearly structured what need to be claimed and in what scenarios you can claim the input tax related to mobile phone expenses or data package. Many businesses are still not adopted the best practice of maintenance of blocked input tax register, and I would strongly recommend for everyone to have a separate register for identifying the blocked input tax scenarios. The next common mistakes is the differentiation between reimbursement and disbursement transactions. Most common questions that we get from our clients relates to this differentiation, even though there was a public clarification issued by FTA on this topic. And it is very common in business that they incur some expenses and subsequently recover such expenses from another party. So VAT treatment of such recovery is always depends upon whether it's a reimbursement or disbursement. For VAT purpose, this reimbursement of expenses falls within the scope of VAT, but disbursements are not. So what we need to do, business should go through this underlying contract which they signed with the customers and establish whether you have acted as a principal or as an agent in purchasing such goods and services. So if you have not done such exercise or analysis, that may lead to misinterpretation and application of VAT incorrectly. I have touched based on this adjustments to import of goods. It's very relevant because at the time of audit, FTA's first thing is going to ask is the reconciliations between your customs records versus the books. So it's very important to know whether it is reconciling everything. Yes, so now look at this slide. It's something related to the amendment in the administrative penalties. The Cabinet Decision 49 replaces the Cabinet Decision 40, which is with the several amendments in the administrative penalty. This amendment was with effect from 28th of June 2021. And these amendments generally reduce VAT penalties for non-compliance. Many penalties have been reduced. And the most significant change is that the taxpayers will now be given 20 business days to settle the underpaid taxes without any late payment penalties, which is a welcoming change by the business community. So you can submit a voluntary disclosure and settle the taxes, underpaid taxes or additional taxes within 20 business days without incurring any late payment penalties. And another significant change in the administrative penalty is the variable penalty for correcting errors through voluntary disclosure before FTA notifies you of an audit. And also, what would be the impact if you submit a voluntary disclosure after you getting an audit notice? That we are going to look into in detail now. The first portion of this slide explains what are the changes in penalties as per old regime versus the new regime. And first penalty is related to the incorrect filing, which has been reduced from, Rahul, just go back to the slide, yes. So the old regimes talk about 3,000 and 5,000, and it has been reduced to 1,000 and 2,000. And late payment, when you look at the late payment, where you can see that there is no late payment penalty applicable when you correct the errors through VD and pay the due tax within 20 business days from the date of submission of VD. Point number 3, discuss penalty implications when you submit VD before receiving an audit notice. When you will notice a slab rate increase based on the year of submission of VD from the original due date. So what that indicates is the sooner you correct your mistakes, the lesser the penalties. Otherwise, the number depends upon which year you are correcting your mistakes, will also depends upon the percentage of increase in the penalty. Fourth point, discuss the penalty implications when you submit a VD after you receive an audit notice, where you will notice a straight 50% levied on the difference in tax due and an additional penalty of 4% per month till the date of receipt of any tax assessment. So what we are trying to say here is that the penalty received due to submission of VD after receiving an audit notice could be approximately 7 times higher than a penalty that you may incur due to the submission of VD before you getting an audit notice. So it's very important that you do an analysis on what you have submitted in the past and make necessary corrections before you get an audit notice from the authority. UAE has recently announced certain amendments in several provisions of the Federal Decree Law number 8/2017, and there is also amendments in the Tax Procedural Law. These amendments will take effect from 1st of January 2023 with respect to the amendments in the VAT Decree Law, but the amendments that's prescribed in the Tax Procedural Law is going to be effective from 1st of March 2023. So there are few important amendments in the Tax Procedural Law also happened. So if you look at these amendments, approximately 24 plus 25 provisions has been amended. In general, these amendments includes both changes which are materially very crucial, and some of the changes are just rephrased the VAT sentence law in the law and improved legislative requirements also mentioned in the VAT Decree Law. Since some of you have joined from the new implementations in Qatar, so as I mentioned in the beginnings, Qatar will be implementing VAT very soon. And what as a business you should do in terms of VAT implementation is just to have some kind of a project plan. You need to have some budget for implementations, and you may need to involve some consultants, trainings, resources, IT systems. All this need to be set up in the beginning. So also it is recommended to have a project steering committee and assign responsibilities. And normally this project steering committee includes heads of various departments, legal, procurement, HR, all this could be involved in the project plan. So that's make sure that the VAT has been covered in every aspects of the respective organizations. And secondly, the raising awareness. So you have to educate your trained employees on the impact of VAT on accounting and reporting processes. So you need to have regular awareness sessions to educate these every employees in the organizations. The most important aspect is the VAT impact assessment. So what does it means is you are mapping the business transactions and classify VAT treatment of all business transactions and take positions of VAT correctly. So this is done through a VAT impact assessments to understand what is the quantification or what would be the overall impact in your business. Some business fall under zero rated supplies only. So those companies, if you look at this in many regions, in many countries in GCC, there is a provision called exception from registrations if you are only making zero rated supplies. So if you are only making zero rated supplies, you will fall under registration exceptions. So just to understand where you fall in those aspects, especially cash flow and working capital requirements need to be analyzed in very importantly, because its impact. VAT is always paid on an accrual basis. That there is a timing difference between paying VAT and receiving payments from the customers and refund, and also related to the refund that you apply to the FTA or tax authority, and the time frame to get the refund from authority. So there should be some cash flow and working capital requirement analysis should be done. From system and IT is a very important pillar in the VAT implementation. Just need to analyze existing accounting systems, its current capability, and what need to be updated in terms of producing the tax related documents from the system that need to be done on a continuous basis. Pricing, and when you look at the pricing as a business, you will be accounting VAT now, and what you are going to do after the implementations, whether you absorb the VAT as a cost or you pass on to the customers. But at the same time, you also need to study what is your competitors are doing. So it should not have any negative impact to your pricing strategy. Contracts you must review the existing contract or the ongoing contract, and to ensure that whether you have a VAT clause in place in such contracts. Customer and supplier management is also very crucial, because you need to start establishing communications with these customers and inform them that we, as part of the VAT implementations, we would be implementing so and so things. We require these supporting documents from your side as a part of the supplier customer management. Finally, and most importantly, is compliance requirements, whether with respect to registrations, whether you meet the registration threshold or you get a kind of exceptions, and your filing frequency, whether you file the returns on a monthly or quarterly basis, and what could be the payment options when it comes to the compliance procedures. With that, thank you once again for joining this webinar. With this, I would like to end my presentation, and if I would like to hand over to Lydia for Q&A.
Yes, thank you so much, Deepak. That brings us almost to the end of the session. In the interest of time, I picked 3 questions, and in the meanwhile, I tried to answer some of the questions in the chat live. If you still have questions which couldn't be answered in this session, please feel free to drop us an email afterwards. So the first question I've received is, as per the latest amendments in VAT decree law, is the taxpayer allowed to submit VD after the expiry of 5 years?
Okay, so based on these amendments, it does not allow a taxpayer to submit a voluntary disclosure after the expiry of 5 years from the end of the relevant tax period. And earlier, it was not like this. If you can still file a VD even after 5 years, but the only thing is you may incur 40% of the penalty on the tax difference. But going forward, from effective 1st Jan 2023, you would not be able to submit VD after the expiry of 5 years.
Okay, there are a lot of other questions regarding the recent amendments. One is again regarding the VD. due to the amendment and the statute of limitation in the VAT decree, is it allowed to submit VD in the 5th year? And what could be the implication?
Okay, so as I mentioned during my presentations, there is a new additional clause has been added in the VAT decree law, which talk about statute of limitation, amendment in the statute of limitations. And in case if VD is submitted before or 5th year, like you are submitting a voluntary disclosure in your 5th year, and in such cases, and you received a notice, audit notice in the 5th year from the authority, what FTA is required to do, the tax audit has to be completed or tax assessment has to be issued within 1 year from the date of submission of the VD. Just the difference is here is 1 year. In my presentation, I mentioned 4 years. If FTA is released a notice in the 5th year before the expiry of the 5th year, they can conduct the tax audit in the next 4 years. But that provision is not applicable when you submit a VD in the 5th year and you received an audit notice. So in that case, FTA gets only 1 year to complete the tax audit and as tax assessment. That's the difference.
That's clear, and I'll take a last question for today. It was all over the news, so many participants are asking what sorts of changes are expected in this new system, Tax.
Mr. Badri, would you like to answer this?
Yes, actually, I was involved in the beginning of creating the system. As I mentioned in my presentation, that FTA gathered all the feedback comments from all the stakeholders, user, admin user, taxpayer. I feel that Tax will be the best solution for the taxpayer. But as I mentioned also in the earlier, you need to start first to see your challenges. And I hope that these challenges will be eliminated in few months of establishing or implementing the new system. In my opinion, it gives a 360-degree for the taxpayer as well as for the FTA user. They can generate a report, they can track the payment, they can show the outstanding. It will be much easier than the current portal.
Yes. There is a correspondence sections where for tracking the status of applications and communications with the FTA, so which gives them more comfort that for taxpayers to have a direct communications with the tax authorities going forward.
Okay, thanks for this. That also brings me to the end of the session. Before I hand it over to Oliver to give the closing remarks, I would like to again thank the German Emirati Joint Council for Industry and Commerce, AHK, Oliver and Markus and the entire team for this opportunity to co-host this webinar today. And of course, Mr. Badri and Deepak, who were our speakers today. So thanks again for the attendance, and Oliver, back to you.
Thank you very much, Lydia. Thank you to Mahmoud Badri and the whole MBG team. Of course, it cannot be a closing because VAT continues to be an ongoing exercise for all parties involved in it. Obviously, the tax authorities themselves, but also the private sector and tax advisors and other experts. Therefore, I'm pretty sure this is not the last event of this kind, no matter if it's about the UAE environment or the Qatar environment. Having said this, I continue to give my full trust into the MBG team for future activities and events. Thanks again for having organized this with us, and thank you also internally to Markus and colleagues for their great support. I wish us all a successful afternoon and see you all very soon, either digitally or in person. Bye-bye.
Thank you very much.
Thank you all.